Welcome to Friday Live. Every Friday, me and one of my partners get together and discuss what's going on in the economy and the markets. We go over the blog posts that were released throughout the week. We try to do one daily, so keep an eye out for them. But this week, we will be talking about the New York Fed survey, the FOMC minutes, the big beautiful bill, jobless claims, and a blog post I wrote about what's inside your portfolio. Before we get into it, let me just say that nothing that we discussed today should be taken as any recommendation. Everyone's scenario is unique to them, so talk to your financial professional. We are available here to answer questions, so you can also give us a call. So let's get right into it. Monday, the look ahead post, the New York Fed survey showed that there was some dispersion. The longer term inflation estimates held steady, which is good. And actually, the 1 year estimates ticked down 0.2%. So that's good news. Growth was a little more uncertain, just like the Fed. There's not really sure. There's not a lot of confidence. So the FOMC minutes showed that there's starting to be some dispersion. Two members actually thought a July cut would be appropriate if the path of the economy goes as they expect, while other members are anticipating potentially no cuts in 2025. So I think that's appropriate given we don't know really how the tariffs are going to play out, how they're going to be implemented, how companies are going to deal with those tariffs, whether they absorb some, pass it to the consumers, most likely a combination of the two. Um, we also did a blog post on the big beautiful bill. There's some beautiful things in there, not all, obviously, depending on what income segment you're in. My interpretation is that the biggest beneficiaries will be the upper middle class, and that's largely due to the SALT increase. It's temporarily getting increased to $40,000 in some states, so um, that's pretty high. So that's really going to benefit people that itemize. There's also an increase to the child tax credit, and they're implementing a $1,000 investment account for children, which parents or loved ones can contribute to for their child. There's some benefits to Social Security, um, an increase in the standard deduction, decreases to EV credits, Medicaid, food stamps, some requirements there. So overall, I see it as it could potentially add to growth. However, it also has the potential to add to inflation and hurt some segments of the economy, especially uh, the potential for the lower class. So, um, but at least we got some clarity on that bill. Markets are doing well. They're hovering around all-time highs. We're starting to get kind of extended on the momentum indicator. Sentiment's getting a little elevated. So I am anticipating we probably have some potential more upside in the near term, but probably by the back half of July, early August, we're probably due for a pullback. Um, Valuations are getting very extended again. We're around 22 times forward earnings. So earnings are coming out next week. They'll start at the end of the week with the big banks. But before that, we'll have the inflation data coming out, CPI on Tuesday. Core is expected to tick up a tenth to 2.9, approaching 3%. So that's not going in the right direction. We'll get PPI on Wednesday and retail sales on Thursday. So I'm particularly interested in the CPI data. PPI is always a good one to watch, and retail sales, and what retail sales mean for how the consumer is feeling and what that's going to mean for upcoming earnings. So right now, earnings are expected to come in around 5%, revenue growth closer to the 4% level, contraction in margins. So it is a deceleration from the first quarter, but still overall a healthy pace. I think in the coming quarters, we're going to start to see a big tailwind from all the spend that's been going on in AI, especially in the technology sector. Um, and before I go, I forgot to mention the blog about the what's inside your portfolio. So that just talks about knowing kind of the sector makeup inside your portfolio. Depending on what you're overweight or underweight in, it's going to significantly affect your performance. An index like the S&P 500, if you're tracking that, is market cap weighted. So it's very heavy in the big technology stocks. That's why performance tends to differ quite a bit from the equal weight. So just be aware of what's inside your portfolio and realize that's going to really affect your risk and return going forward. Next week, we'll have the look ahead post on Monday. So we'll be talking about the CPI data, the PPI, retail sales. And then we'll have some blog posts coming out through the week. Thursday, I have a blog post coming out that's going to talk about whether we need to be concerned about the decline in the dollar and whether the risk of losing the reserve currency status is a possibility. And then we'll be back next Friday by 12:30. So tune in for our live discussion. I hope everyone has a nice weekend, and we'll see you next week. All right, take care.